Hello, everybody. I am Baldwin Berges of Silk Invest. Silk Invest is an investment manager who focuses on opening new routes for investors. We invest in sustainable businesses, and we serve a rapidly rising consumer base in the frontier markets. To us, frontier markets mean places that have a high population level with a strong GDP growth and where there's a middle class emerging. Favorite countries, and where we're also locally based, are Nigeria, they're Kenya, they're Egypt, Morocco. One of them is also Pakistan, and that's what we're going to be talking about today. And I'm here with Hifza Zia, who is based in Karachi, and she's our Frontier Asia Portfolio Manager. Well, I think it's afternoon for you, Hifza. How are you?
Hi, Baldwin. I'm good, thanks. Yes, it's afternoon. It's 2 p.m. here.
Yeah,
So,
you're a few hours ahead of us here in Europe. But it's good to
yeah.
have you on the phone. We're going to speak a little bit about what's going on in Pakistan. I mean, we have the luxury of having you there with eyes on the ground, and with you obviously know what's going on because you consume the local goods, you talk to the local people, and so there's nothing like a local presence. So, I think Pakistan is the kind of market that often confuses a lot of people, I guess, because obviously the global headlines aren't always very friendly to Pakistan. I think there's obviously a lot of misunderstanding. It's obviously not, we don't have such a myopically close view on it as you have. But the one thing, there has been change, and the market has responded really positively, because we're looking at let's say in the last couple of weeks, we've seen a market that's gone from the 36, so that's the Karachi 100 exchange, has gone from levels of 36,177, and it's currently trading around the 40,600 level. So that's quite a rally. So why don't you give us a little bit of a perspective, Hifza, on what's been going on, and how do you explain this market to people who are not that familiar with it? Where would you start?
Yeah, thank you so much for giving me this opportunity. Pakistan has been very happening, and particularly for past 1 year, since we have been seeing so much change in the political landscape locally, with the government going from, you can say, there has been change in the, you can say, change in the mindset of the new government, in a way that we are more going towards good governance in the local democratic setup. We have seen, we have been into the dictatorship for a couple of years. We have
Yeah.
we have seen like three major dictatorships, and for 3 decades they were there. But the good thing about Pakistan is that we have now more. There has been second successive transition from one democratic setup to second, the new democratic setup. And this time, the good thing is that it has been moving towards, you can say, the better party who can rule the country, from being one of, it's not like the consecutively one party is winning for the last one cycle or two cycle. But this time, this is the second transition, but the third party coming
Right.
into power, which is good thing in a way that this party, although it hasn't been into power for any kind of democratic setup, but they have good, you
Mhm.
can say, more enlightened, more pro good governance, less corrupt
Mhm.
people there. So that's kind of very positive for the Pakistani local political landscape. And with the successful transition, with successful elections being held without any major, you can say, riots or any mishap in the country, this has been taken as very positive by, even I guess, the international media and the international community and investors. Uh,
Yeah.
uh, that's the major thing we think.
Yeah, and so
Every,
I
I
mean, in
think
the
everybody.
honeymoon of this, yeah, in the honeymoon of their new government, I mean, they've already achieved quite a bit, haven't they? So it seems like, well, the market's reacting positively to this, but it looks like um, Pakistan is faced with a series of financial challenges. Obviously, it's an importing economy, and so they have to work extra hard to sort of fix their deficit up. But it seems like they've been able to get. Let me see. So they've been able to get a nice pledge from a financial pledge from Saudi Arabia, right?
Yeah, yeah.
There's another
That
one on
was
the way from their neighbors in the Emirates, I think. Explain a little bit about how there seemed to be like a club now of friends of Pakistan who kind of seem to be supporting Pakistan's new wave to reform, to economic reform. Tell us a little bit about that.
actually, if you see, Pakistan has very important geopolitical location, and because of that,
Yeah.
so many countries we have which they need. They are kind of very supportive to Pakistan to remain in good growth oriented uh, economy. So for that, and plus with the new government, although as I stated that this government wasn't in was governing before, so this is for the first time there, but they have really good experienced people on their board in their cabinet. So they actually utilized all their options. They consider all their options. What's the least you can say? What was the least? Which can least costly method through which we can just overall revamp our economy, because we have seen this major outflow of our forex reserves through imports, oil imports, because we are major oil importer economy, and then with this China-Pakistan economic corridor, which has been in full swing since last 1 year. So the machinery import was also a major part of our imports. So we had major imports, but the export front, we were not very growing. So for that, this government, after coming into power, they have considered all the options and the least costly one. So they first have approached their friends. So in our friends club, basically we have the Arab countries, and one of the major is obviously China, with which we are having this major economic corridor project going on. So from Saudi Arabia, with our Prime Minister going there last week, we got very good. He basically attended their investment initiative conference, and we were very successful to get 6 billion from there, 3 billion as budgetary support, and then 3 billion as in terms of oil deferred payments. So that has given a good respite to the local equities and local investors, because we were not. They had been into power for past 3 months, but they were not giving clear direction to the economy. So everyone was waiting. Once there is official confirmation coming from the government, how they'll be going towards increasing or improving the forex reserve situation, because as you know that declining forex reserves always have negative impact on the currency. We saw our currency depreciating by around 12-13% lately, and then also it has second down impact on the inflation. So in order to control that, and in order to control further depreciation in the country, everyone was waiting that this government should announce something or should come up with concrete economic plan, so that we know that it has one direction. So with this pledge, know that we have something in pipeline. Next, we are expecting some good agreements with UAE. The delegation was there last week, and they have signed. One of the major is around $4 billion of refinery project, and we might also get some inflow in terms of a kind of relief in terms of deferred oil payment from UAE as well, which is highly likely. And then the Prime Minister is now visiting China. He's in China as I speak.
I see. Okay.
Yeah, so he's there for 5 days. So we are seeing that there might be good pledge coming from them, although we are not sure about any quantum, and we cannot obviously quote that, because they will be more focused on renegotiation on some of this China-Pakistan economic corridor related projects, so that there is more, you can say, joint venture or investment based projects, rather than just getting financing and increasing the borrowing costs. So that this government is more focused on in this visit, which will obviously have kind of positive impact on the FDI, plus obviously on the forex reserves. And then we might get some budgetary support, as China has been very kind to us for a couple of years. We already have around 5.6 billion, out of which around 3 billion is as a budgetary support, which has come from China in last 1 year. So we expect that there might be some relief, which we can obviously get to know early next week, not or maybe some announcement over the weekend. And then the fourth front, which we want to, you can say, go is Malaysia. But most probably with Malaysia, it will be also like it will be a deferred payment facility in terms of palm oil imports.
Mhm.
Not any budgetary support coming from there, but that will obviously have a positive effect on the forex reserves. And
Mhm.
this all Friends of Pakistan structure and overall plan by the government has, we are very optimistic that this will create a good, you can say, negotiation situation with IMF, because obviously we need
Yeah.
around 10 to 12 billion of this budgetary support to cover up our upcoming debt servicing, and to not obviously the future import payments. So IMF program will be there, but this Friend of Pakistan have given us really good support so far.
Yeah, I mean, it's such a strategically important place also. Like I said, it's that corridor between China and the Arabian Sea, and China runs some infrastructure there already. I mean, it's always been a very important corridor, and now it's more than ever. So that's definitely a very strategic card, and it seems like they're playing it very smartly. They're first getting the Friends of Pakistan around them before they go and deal with the IMF, which is obviously always comes at quite a price, you know.
Yes,
Another thing that I noticed is so there's this rally, impressive rally. It's like people, it's probably backed by the sentiment based on what we just spoke about. I mean, even, and I think the macroeconomic forecasts that are still printed out there, they might be quite pessimistic in a way, because I mean, I think, well, the market has kind of recovered, but I think there's upside for surprise here as the economy gets shored up and money comes in. So that's another thing I would probably be on the lookout for, where you can see the macro numbers improving. Because right now what you have is, I mean, actually what we're seeing printed out there by analysts out there is like, they seem to expect more inflation. They seem to expect, you know, I mean, let's say the GDP per capita seems to be stagnant, more or less in the prediction. But I think what we're looking at maybe is a potential to surprise on the upside. Would you agree?
yeah, definitely. They might be good surprise for us, because the forecast is usually, as I mentioned, that we have seen inflation going up. The first impact is coming from the oil prices, because we import, we have to pass on
Yeah.
any surge in the oil prices. And then second impact was the currency depreciation. So that's why we already were seeing inflation to go up. The base effects was low, so we were already expecting the inflation to be averaging around high single digit. Like today, the October number came in, and it's around 7% Y-on-Y basis growth. So that was already in the forecast. Then inflation would obviously lead to high interest rates. We are already seeing around 2.7% hike in the interest rates on the
Yeah.
CY date, current year to date, and then another with the inflation averaging around 7 to 8% for the next fiscal year. The state bank is already seeing another further hike in interest rates, and everyone is expecting around 50 to 100 bips in the next monetary policy, which is towards the November end. So these things will obviously have negative impact on the cost of business. When the cost of business going up, the companies, the margins will be going down. And obviously, we have in the GDP, we have major earnings coming from the industrial and the services sector. So that's why you will be seeing GDP growth to be lowered from for 2019 and 20. That is more, it's cost of business going up, plus
Mhm.
obviously with the austerity measures being taken by the government, the new government controlling their expenses, less spending on the infrastructure, public related projects, and then obviously the CPEC is kind of this overall plan has seen slower down because they want to renegotiate some of the projects with China. That will also have the effect which we were seeing to be more materializing in 2019-20, that we can see there might be another lag of 2 years or 1 year from what we were forecasting earlier. So that's the major reason that you would be seeing GDP growth forecasts being in the low single digits. But we might be surprised given some of the sectors like commodity-based sectors, they are doing really good. If you see the fertilizer sector, oil and gas, E&P sector, their earnings have already seen double-digit growth. So they are also major part of our industrial sectors, and plus auto sector is also doing good given the government has given really good investment policy for the automakers. Plus they are inviting the new investors in terms of very flexible regulations for the auto sector. So there are more foreign investment coming in the auto sector these days, and you would be seeing in next 2 to 3 years new international companies venturing with the local partners here. So that would add to the productivity of the country, and I'm very positive that even the government has more focused on the austerity thing, but we might see some sectors doing really good in next 1 year or two.
Yeah, and also, I mean, you have to take into account that the rupee has basically lost half of its value over the last 10 years, right? So basically, we're looking at, in that 2000 anyway, we're looking at levels of where it's trading around the 60 and currently against the dollar, and now it's at the level of 130. So you have to take that into account as well, that's been discounting a lot of trouble, obviously. And so, you know, I guess that's quite a hit for a currency to take. And if you're looking at a nation that's going to be improving its fundamentals, that's another part of the trade, I guess, to take a bet on Pakistan. Absolutely. Yeah. So I mean, looking at yeah, go ahead.
Yeah, for the depreciation, I think if you look at the normalized depreciation rate for any kind of developing country like Pakistan, it would be between 4 to 5%. For us, there was stagnancy. It was artificially controlled by the previous government for last 2-3 years, around 100 and 105 levels. So there had to be this bubble to be burst, and that's why we saw major pressure coming in this year, because with government, the previous government, and ending its tenure in May, and then the new you can say interim setup, they let loose the exchange rate to have its real value. So if you can see, even the real analysis, there was around 24% overvalue of currency from 2017 levels. And with this current spell of depreciation, I think we are at par now. We are fine with the rate as per the local economy.
Good insight. Thanks. All right. So zooming in a little bit on the market. So let's say the KSE, the Karachi Stock Exchange 100. If you look at the breakdown, it's actually quite a diversified market. You have energy, financials, materials, utilities, and consumer type stocks. They're quite well weighted out across the spectrum. To no surprise, I mean, I guess you have you know, I think the biggest category is financials, but that's very typical, I guess. But so what you have is you have quite a diversified market. So you do have a bunch of opportunities to choose from. So right now, you as a portfolio manager, how are you positioning our fund for Pakistan? What are the main ideas that are running through our Pakistan allocation right now?
I think even considering the benchmark, financials should be there, but with the interest rate cycle going towards contractionary policy being adopted by the central bank, I think the banks would be the major beneficiary in terms of better margins, and also with the current currency depreciation, some of the banks have already booked really good gains on the FX as well. So my first overweight stance would be on the banking sector. Big
Okay.
banks, we being international investors, we always obviously go for the blue chips. But some of the banks, big banks, they had major, you can say, the long-term bonds on their portfolio. So when there was there was declining in the interest rate in past 2 3 years, they had really good capital gains on their books for 2017 and 18. As this have been now matured, they are now waiting for the interest rates to again go up, and then they managed to have more long-term bonds on their books. But at the same time, I think from if you want to have really good exposure towards bank, then I think mid-tier banks will also do good, given
Yeah.
they are more towards lending. They have less exposure towards the investments. So that has resulted in good growth even in the time when the big banks are seeing shrinking in their in the margins and obviously the growth. The mid-tier banks are doing good. So my first pick would be the banking sector in Pakistan.
Yeah.
And
That makes sense.
yes, and then obviously then although we as per our investment strategy, we are not into commodities, but I think
Mm.
given the oil prices are although there has been up and down lately, but I think the oil prices at stabilizing around 65 to 70 levels, plus the revenue is more dollar denominated. The E&P sector is the second one, which we see more inflows coming in. The growth is there. They are dollar hedged, so they are one of the. That would be the second sector I would suggest. Although we cannot invest, but I think that's the second major top sector to consider when going for investing in Pakistan.
Okay. Yeah. I think also you're right about this. Just to comment back on the banks here, I'm actually just while you're speaking, I was just googling something here, and I'm saying that the perspective seems quite up. So they're talking about. I don't know if this is in research that says that they're expecting the bank accounts to reach 49 million by the end of 2017. I'm not sure where we are right now about that, but there's definitely also like a deployment of banks and the growth of banking, right? What are the trends that are driving that mostly? How are the banks getting people to open accounts?
It's more like towards now digital banking or mobile banking rather than just having
Yeah.
the physical presence. Although there has been some of the banks are very proactive in opening the physical branch everywhere. On average, I think around 15 to 20 branches are being opened by the banks in the country right now, and it's more to have give access to the common person in Pakistan. But I think with the mobile banking, the things have changed totally. It has also
Yeah.
not given more access to the local person in Pakistan. It has also reduced their overall cost structure in terms of going for renting or buying the property and then having more personnel there. They are more towards digital banking. And then another factor is the agent banking is also very much flourishing in Pakistan. So these banks have their contracts with the Asian banks, agents who are not there, who just visit the place or the area, but they do not have any kind of physical presence there. So that's in terms of in the agent banking, it has also reduced their overall cost. It's just the personal cost, but that has also improved the access to the unbanked market, but also have reduced their overall cost structure. So that's why if you see the cost to income
Yeah.
ratio is well maintained by the banks. Some of the banks are also they're kind of late movers, but they are still investing in the this technology, digital banking, mobile banking. But I think that's the next step, because you see
Yeah.
the internationally, it's fintech which will take the overall, which will have more you can say which will drive the overall banking system internationally. So some of the banks were very proactive, like UBL we have in our portfolio. It was one of the first which launched mobile banking system in Pakistan, and they're this Omni Bank. It's one of the biggest, has one of the biggest market share here, and it's growing really well because their business model is really good in terms of mobile banking. So
Yeah, and
everyone
I
is
guess it's,
following that, and I think, yeah.
yeah, go ahead. Sorry, finish.
I was just saying that this would be the, I mean, the next step is just more towards digitalized banking rather than having the physical branch there and focusing on the deposits and advances.
Yeah, yeah, and I guess if Pakistan then again can portray itself increasingly as being a place that is good for business, it's a 200 million economy. That's very attractive for fintech players, obviously, right? That's definitely going to
Yeah.
happen, I guess. All right. So, anything else you think is important to mention about our strategy or yours, or at least the way you see us allocating further
I
into the
think that
market?
the second, apart from banks and oil.
Yeah.
Yes, of course. I think the second major factor you have to consider is the consumerism, because we are
Yeah.
growing we are the population, 200 million population, with majority towards in the age bracket of 25 to 40 years age. We are in a
Mhm.
phase of like this rising consumerism, and the people here are more towards working class now. Its urbanization is
Mhm.
also there. So in this time period, I think the consumer stocks would do really good. Plus, there would be more urbanization. There would be more people going for housing projects and
Yeah.
improving their standard of living. Lately, I think it's not being very much highlighted in the international media, but we are more towards now mall culture. We have really one of the biggest, you can say, the Lucky Summit we hold in our portfolio. It has just constructed last year one of, you can say, biggest mall in the country,
I see.
and they have entered into the real estate. So, and then some of other big groups, they are also into the real estate with commercial malls, and then going into residential schemes. So I think with this, materials, I think would be the next major sector to look for. Although they have the cost factor there, given some of the companies have high leverage, as the cement sector is going into is in the capacity expansion phase, because they know that this time we have already around 89-90% capacity utilization. Some of have already announced, still we have around 90% capacity utilization. Although next 2 years won't be seeing major construction activity going on in the country, but obviously after that the long-term investor will go for 4 to 5 years horizons. And in that way, with the rising urbanization, with the rising real estate construction going on, I think if we want to have a good name in our portfolio, that would be coming from the materials. And the top names which I would consider would be Lucky, because it's not just pure materials, because it's also into the real estate. It's very, you can say, precisely tapping the rising consumerism in the country. They are into the real estate with the commercial mall. They are into the auto venture, because obviously the auto sales are on the rise in the country. And then they are also going for other consumer related ventures. They have subsidiary ICI Chemicals, which is into this, you can say, chemicals and paints manufacturing. So they have very clearly diversified business segment. So in that way, Engro is also there. Engro is into fertilizers, and then Engro is also into Engro Foods with the tapping the food segment, the dairy segment in Pakistan. So there are some of the really good consumer names which I would consider would be part of our portfolio, which some of we already hold in our portfolio, and some I think we still can have, given this is it's rising, you can say, consumerism era in Pakistan. And what, as international investors, some of they just think that okay, maybe it's not like the country is not into, it's very backward, or maybe it's more what we see in the media is more towards terrorist attacks, or the country is very into, you can say, not growing as well, but they have to come and see the way things are changing in Pakistan, the way standards of living have improved for people. Even the rural areas, you have good access to some of the products which we can hardly see 10 years ago in even the big cities. So the overall scenario, overall situation has changed in Pakistan.
Wonderful. All right. Thank you for that, Hifza. That was a nice roundup of the market from the local perspective. So really appreciate making the time to share that with us.
So I was just saying that thank you for having me over, because it's good to have uh, giving a good update to the international community in terms of the way we live, the way things are changing, which we are seeing, being on ground, being living here, being born here. So it's good to share with the international community that Pakistan is not the same which we see on the TV channels or in the international media. It's something different. It's very interesting story to consider. And it has lots of potential to see if someone is willing to come and grab some good information from here.
Well, it is one of our key focus markets, so you'll find it in our portfolios in one way or the other, always at an above average weight, I guess, but compared to other managers or indexes. So it's an exciting place to be focused on. So, all right, let's round this up. So, for more information about Hifza or Silk Invest and what we're doing, feel free to go to silkinvest.com. That's silkinvest in one word.com, and you'll find everything you need there about our funds. And we kind of publish interviews like these. We write up insights. So if you're curious about these markets, want to know more about what's going on from a local perspective, feel free to sign up and get those items in your inbox anytime. So thanks very much for your time, and until soon.